All right, welcome back to the channel, everybody. Trade the Matrix. This is Morpheus. It is Sunday, June 7th, 2026, and this is our SPX market overview. Start with the notes. Market update. Week of June 1st to the 5th, 2026. U.S. stocks sold off sharply on Friday after a much stronger than expected May jobs report. 172K added versus 88K consensus. The hot data fueled fears of a delayed or paused Fed rate cut path, sending bond yields higher. Friday closes, NASDAQ composite minus 4.2%, 1,100 to 1,121 points. So worst day in over a year. S&P down minus 2.6%, and the Dow Jones showed relative strength versus the two, down 1.35%, about 694 points. And Russell 2000 small caps also noticeably weaker. So the week in review, the week started strong, extending a powerful bull run. The S&P had 9 straight weekly gains, entering the period driven by robust earnings, AI enthusiasm, and easing geopolitical tensions. Early gains broadened somewhat, but momentum reversed midweek. Friday's labor surprise triggered a sharp risk-off move, especially in tech, semiconductors, and growth stocks. Bottom line, strong May, up 5% in the S&P, gave way to mixed to negative finish. Tech and AI names, which led the rally, took the heaviest hits, and defensive and value held up better. Markets now await next week's data and Fed commentary for fresh policy cues. Okay, so let's take a look at this is our SPX cash session monthly chart. We talked about May's swing high to swing low pivot. We pretty much retraced 50% of May's swing high to swing low. You can see right about in there. So if we shore this up a little bit, the low from May was, the low from May is 71.74. So we'll just take this guy here just to make it proper. We'll just get a little bit closer. There we go, 71.74. And the high was 75.99.35. So just to make it official from last month, there we go. That looks good. Okay, so 50% retrace of May's candle was around 73.86, and wouldn't you know it, we pretty much retraced 50%. I mean, a little bit more. The low was 73.68, but we closed at 73.83.73. So here's our monthly pivot that we're at here. This area here is going to be important in my eyes. So we're going to look for this. If we do, and we gap down slightly, you can see on the SPX 500 already. We've already retraced the lows. But let's say, just devil's advocate, if we do trade down, and there's a gap into tomorrow's open, this is going to be our key resistance to get back up over. Okay, so around 73, obviously 83, 73, 86, around that area. So that's the big picture. We'll zoom in to our weekly candle, and pretty much here was here is the previous week's candle. You can see it's a bearish engulfer. So and it's basically testing the range here. Basically the lows from this swing, these swing lows here is kind of like my next level down of support. That's kind of really important. We'll get a little bit closer look at that on the daily. But let's just take our fib. We got 73. Let's just call it 85 on the mind. Okay. So we'll take last week's candle here. But before we do that, let's take let's take the previous week's candle and let's just see how far we came down. Okay, so here was the low, here was the high from previous week's candle. So we came down, we flushed, almost down to the 2618. You can see this was our critical support here from the previous weeks earlier in May. And basically, what I want to do now is take the previous week's candle right here, and we're just going to do one of these. Okay. So now we have our weekly pivot, and our weekly pivot is going to be around 74.95. Okay. So just think about it like this. If we get up above 70, if we get up above, 73.83, we have a key level of key psychological level of, let's say, 74.50, and then above 74.50, we need to reclaim, 50% of the previous week's candle. So here's our kind of weekly pivot. You can mark that, take notes, and we'll go back. We'll go take a little bit closer look. We'll look at the daily here, and here is Friday's candle. And we're going to do the same thing here. We're going to take swing high to swing low. You can see right there. And basically our daily, between 73. Now these are kind of shorter term intermediate targets. 73 low. I'm sorry, it's actually technically the low is going to be 73.68. If you want to mark that down as key, we'll say key support on the daily. I just have 73.70, but 73.68 if you want to get technical. And you can see here, this is support off of this kind of breakout here, right? So this is going to be pretty important, I think, because you can see here the extension on the daily, breaks down this range here. We have a gap here, and 72.60 can come pretty quickly if volatility increases. So maybe we get a little recovery, a little bounce, and maybe we trade up into 50% of previous day's candle, or we could just come right back down and test the next level of support if the momentum continues to the downside. So that's basically our daily range here. Now, if we go a step further and we take a look at the hourly chart, all right, we've got pretty honestly. I know it was a big drawdown in the Nasdaq, and a little bit less significant in the S&P, but it looks pretty controlled on an hourly. So, something that you can basically just do is take your trend line tool here on the hourly chart, come snap a line like this, and then you can see here there is also some resistance like this here. So it's not out of the question to possibly do something like this before we maybe take a dip lower or we get a recovery. But seasonality is kind of telling us that we're rotating, out of growth into value. So what I'm probably going to look to do is potentially focus more on the Dow, the YM maybe, and maybe a little less on tech. I think that we definitely can find opportunities in different sectors when we have weakness in the main in the big dogs. So healthcare, financials, we'll get into a little bit more of that later on in the session. But here's our we got a pretty steep decline here, obviously. It looks pretty controlled at this point here. But That's our hourly chart here. And then let's get into the 15-minute. We can review um, some of Friday's action. We can bring the plan up and just take a little look at how we could have traded that. Here was basically our SPX cash session, little channel that we kind of traded down in here. So let's bring up the SPX 500 here and clean up some of these. Oh, not that. We don't want to do that. Come back. Baby, come back. Okay, remove drawings. No, I did it again. Excuse me. Let's just do this one at a time. All right, so here's our SPX 500. So this is the electronic trading hours of the SPX. And basically, what I want to do is we're just going to look at the 15-minute chart here. And I'll bring up the plan. Bring up the plan from Friday and see where we went. I know we hit all sorts of extensions to the downside. I think we were minus 3 ATR on the day. But I will just post the SPX day trade plan from Friday right up on here. All right, take this here, copy, paste. Okay. Get this up a little bigger here. Here we go. All right, so overnight resistance was 75.69. So I'll tell you what, we'll take our little where is my, I like this right here. Okay. All right, so we're just going to take 75.69, right? So 75.69 right here, okay? You can see here, this was the resistance from the London session. And our pivot was 75.50. So again, we'll take our little tool here and we'll just mark that out, 75.50. Okay. Close enough. And then support was 75.33. So 75.33. Okay. All right. So you can see here 33 to 69. I usually try to make my plans anywhere from 30 to 40 points if I can, as far as the swing high to swing low here. And the reason for that is that it actually happens quite often just by default, just finding, kind of the most liquid areas. But I like to find that kind of specific range if I can, because that gives me a very asymmetrical plan that I can build off of the pivot. So let's just say it's 30 points. If you're above the pivot, we're going long into resistance. 15 points, lovely. You can set a stop for 8 points below the pivot, and on the other side, if you're shorting it, 15 points to the downside and 8 above. And that usually works out really good. It's excellent risk versus reward. We always want to target 1 for 2, and so that's kind of my methodology and my strategy kind of revolves around that. Now, the levels that I come up with are not just based on what the range is, but I mean, it just when it works out that way. It's kind of like a really A+ setup. But basically, the reason I picked 75.69 here was, you basically got all-time highs here Thursday, right? And we trade down into the Asian session and very range bound. Okay. And then you can see here we've got equal lows. Okay. So um, equal low, and then kind of heading right into the AM New York session, which is the preferred session to trade. You can see here that's kind of our key support here. So swing high to swing low here. This is my support, and you can see it goes back all the way to previous days. Kind of open was our kind of our pivot from the previous day. So what's significant about this is we break down. This is a 15-minute chart, so I'm always trying to um, build my plan and my levels from the previous two or three sessions of the previous day's session, and basically looking for kind of key levels to break down. I want to see key price action breakdown from the overnight and then from the previous day. So when you break support from your previous session, which is our plan, and then you break support from previous day, now you've really got some conviction in your play to the downside. Let's say if you break support. So this is a 15-minute chart. You can see here kind of off the open, there's momentum right away to the downside, and we get the first 15-minute candle here creates this lovely little fair value gap here. Now what I'm thinking when this happens here is, okay, significant sellers come in. There's no buying in this area here. That's what this is an imbalance, right? There's absolutely no orders got filled to the upside. That's why uh, fair value gaps are so important, because it's just institutional selling in this case here. And so when I say key price action at key levels, when you get a fair value gap below support here, now you've got a really kind of solid area to work with, right? It's like, okay, I can use this retrace here as, my entry to the downside. And this thing kind of trades, back up into this and kind of just sells right back off. This is a 15-minute chart. I think the 15-minute works great for those that are patient. For those that are a little bit more kind of short-term minded and looking for like a in and out, like 1 to 5 minute trade. Obviously, we need to lower our time frame. So 5 minute, we'll take a look at that. And you can see same thing on lower time frames, fair value gap, order block. Here was our support. So soon as we break support heading into the bell and you get significant price action like this, you can kind of see the market structure start to shift. So we're pretty sideways. If you look back here in the chart here, you start to break structure, you know, back, you can see lower lows, higher lows, lower lows. This is very choppy price action. But then when you start seeing, you know, lower high, okay, you get lower low, higher high, and then you get a lower high, and then you get lower high, lower low, lower high, lower low. You're you're thinking, okay, we have a clear structure shift, and now we've got a trend that we can kind of follow to the downside here. So as far as the plan is concerned, just bring that back up here. It basically says, um, bias neutral, slightly bullish if 75.33 held. It did not. So we look to our bearish breakdown here from the plan. So entry 75.28 to 75.30, targets 75.15 to 7,500, and then stop 75.40. So this is basically telling us, a very kind of like asymmetrical way that you can trade off of the levels. Now, once we start breaking down key support levels, I get this question a lot. What's the next level down? Well, if I'm taking basically my key support, let's just say we're talking about 75.33 here, and my upside resistance, right, is 75.69. We'll just mark it right here. we're looking down. So break of support here. We're looking for, the extension here. So 75.11 right there. And then once you break down, the 1618, next level down, 268. So when I'm getting basically starting to kind of scale out of a position and setting stops, and if I'm in ES and I'm running my stop down, I'm running my stop down to these extension levels because if we reclaim the level back, I'm expecting it to potentially bounce at least 50% of the range from let's just say the 1618 to the 2618. This was just it was obviously just was straight selling, kind of systematic selling on Friday, and there was no real. There was actually um, there was an opportunity, and I did take it on ES when we got to the 74.50 level because there was a put wall there. So there was an opportunity here, and I did take it, and it was a nice kind of easy trade for me because it was intense selling. We were oversold, and there was a divergence starting to play out, and I said, you know what, I'm gonna take a quick shot. 5, 10 points on the ES at a bounce at around 75 I'm sorry, 74.50. And yeah, that was actually a decent trade. So believe it or not, I took a long I'm sorry, on Friday, and it worked out great. My first trade of the day though was, and I'm going to bring up the big dog here. We'll look at the NQ real quick. And I did mention in um, I did mention in the premium chat. I said I think I'm going to focus on the NQ because the NQ is a beast, and when you get it right, she really pays you. So um, anyway, here was our 50% mark of the from the um, from the plan here. Matter of fact, let me grab that real quick. I'll post that on the chart here. I started posting NQ. So I was just doing SPX plans for the most part and just focusing on that. But recently I've been doing SPX, ES, SPY, and NQ. Pretty much all four of those before the bell, if I can. It's kind of a lot to put out, but I'll try to continue to do that for as long as I think it's valuable. So let me just grab the NQ day trade plan here. And by the way, I used MNQ. I did not use NQ. Um, let's see here. All right. All right. So on NQ, same type of deal here. I found, it was the structure was very much the same. We had equal highs in the London session. We had equal lows, and right off the rip, here was our pivot here. So right off the rip, I just shorted basically the wick off of this 30,138 here. So you can see here that was our pivot, and I was basically looking to take that down, and I took that down pretty quickly. If you look at the 5-minute chart here, here was the New York Open here, and basically took that below support into the 1618 level there. So yeah, 160, 200 points on the NQ, MNQ even is a pretty nice trade. So these days are kind of few and far between, but when you can catch them and capitalize on them, it's great. I was actually I traded this out of the small port, and I couldn't afford to just hold it for the whole day. But if I did, it would have been pretty spectacular. I was joking around. It would have been like, a $20,000 day from 5 lots on the MNQ. And if it was 5 lots on the NQ, it would have been a $200,000 day. But yeah, it's pretty funny. But whatever. I'm not upset about it in the least bit. I mean, this is kind of, we catch there's limitless opportunities. I've had big trades like that. I'll get them again. I'm not even sweating it at all. But I was on the small port, and basically, if I'm, you know, if I'm playing MNQ even, on four. So now I started with 3,000. It's almost 5,000 now in the first 5 days. Um, I think it's like 4,850 bucks or something. But you got to kind of follow the rules if you want to stay solvent, right? So um, I can't really afford to risk more than 80 bucks on a trade. So like if I hit, with that in mind, right? If I'm looking at a breakdown and I make 150 or 160 bucks and my risk is 80 bucks, I kind of got to ring the register. Just follow the process. So that's what I did. I did take another trade. I think it was a decent day for the small port though. I think it was the best day of the week. It was like plus 600 and um, I don't know, 30 bucks or something, which is great. Percentage wise versus the port. It was great. So all 5 days of the first week of June were green for me. Just taking base hits. And yeah, so we'll try to keep that going into this week coming up. All right. So speaking of this week coming up, while we can see there is rotation out of tech, and we may get mean reversion, she may bounce. Um, I would almost prefer to let me remove these drawings. I would almost prefer to play to see if we get relative strength in the Dow to see if that rotation kind of starts to show its hand, right? So, I may come up with a plan for the YM um, as well this week. And if we're looking at that on, let's just start same thing here, right? Let's go back to our monthly here, and you can see here, even on the weekly, right? This is far. This chart looks far better than um, than the QQQ, obviously, and the SPX, right? Like this is still structurally a really nice chart here. We still have a nice trend to the upside here, and nothing has really broken down yet. And we're still trading above this. We're kind of retesting this level here, so you can kind of do something like this. You see change of character here. And basically, we got a nice little kind of trend line to try to see if this acts as support here. But if we're looking at levels to hold on the YM, um, basically this range here, let's say something like this. Okay, we'll do, let's say breakdown of this resistance now acting as support here. We'll look to see if that 49,000 holds. But on the upside, I'm looking to potentially trade this into 51,270 and then above, obviously back to new all-time highs. And should we see a true rotation, I'm going to look for a breakout, and we'll look to maybe tap this 52,561 ish level here. So that's the YM. So these are my thoughts. Now let's take a look at the heat map. Okay, uh, I brought this up here. You can see there was some relative strength in some financials and healthcare, right? So look at J&J, look at Eli Lilly, AbbVie, AMGN, um, UNH. This this sector here is was green, was green um, on Friday. So clear kind of rotation out of our right, our growth, our tech, our Mag 7 stuff, and into some kind of safer stuff here. And then you can see here stuff like Coca-Cola +3. This is kind of like rotation, like just flashing right in your face, right? Coca-Cola, Procter Gamble up 4%. So some areas to kind of, if you want to stay positive and maybe not try to short, the tech stuff, because, shorting the market can be dangerous. if you don't know what you're doing, and you want to stay kind of long. We do have some areas of strength to kind of focus on as far as even day trading here. And I did I posted some stuff on X. I just did a quick little scan. Um, and let me see what those. Oh, here we go. Here, I'll post this. I'll post this right here in the chat. You guys can check it out on X if you'd like. Here, there's some flow analysis of some of these names that look to be potentially relatively strong. So we can look at some of those charts and stuff. I might put some ideas together as well. I'll put them in the swing trade ideas for the subs. Maybe I'll post something on X for everybody. But yeah, so this is what I'm thinking right now. Some other thoughts. Obviously, the VIX is going to be important. We're going to want to keep an eye on crude. I'm sure a lot of people are talking about geopolitical stuff, and while it's all important, um, I try always not to focus on what the news is or what's happening. I pay attention to it, but I don't try to trade based off of what I think the news is going to do. I trade off of what the chart does after the news comes out. That's my approach, which has always worked out well. Um, you know, basically, um, it's a lot of times when you see the news, it's the old expression, buy the rumor, sell the news. So I would rather trade the reaction off of the news and try to anticipate what's going to happen. Um, so that being said, some other ideas, um, you know, semiconductors, right? The stocks, obviously. Let's take a look at that chart. That's important. Um, if we look at here's IGV, here's software, which is also something that we could potentially kind of rotate into out of the um, high growth tech stuff back kind of maybe into software, right? We got a nice kind of reclaim of this weekly 200 here, and you can see here that we got a breakout from the swing high to the swing low of the area that we were looking at, and we hit that 1618. We wicked off of that weekly, and we came back down, and basically tested. And I brought this up here. You can see we basically tested 50% of the swing high to swing low of this move back to last October. So that's kind of relevant here. Um, and something to think about here as far as IGV software names stuff in there. Um, Socks important. Um, you know, Definitely huge topping tail on the weekly here, bullish and golfer. So we've looked at this a time or two, but basically we got this kind of major trend line here. Wouldn't be surprised if we test it at some point. This might be a really nice idea to go kind of back long. Maybe we get a little some summer doldrums, and this kind of fades back to the trend line here, and maybe creates another opportunity. But if I was looking at basically trying to figure out what levels are important here, I would take the breakout here. Um, so around 11,286 is 50% of this whole move off of this trend line here. So break down below 11,286, and we're probably going to come back and tap, this area here, 10,000, and then key support is going to be 85.12. Maybe we don't get down that far. Maybe this bounces right off of this, and then we break out from here, and we just rip face. But these are the key levels I would look for on the socks. And then let's look at XLV real quick here. Hold on. All right. So it's funny because I charted this back in, here was this level here. I think back here in November of last year. These fibs are up from last year. I can see here. But basically, he was looking at, maybe a pullback to 50%. This thing pulled right back to 50%. 50% acted as support here, 142. And XLV is pushing back up. So reclaimed the 786 here. You're talking about, 157. We'll call it 158 to 160 on XLV. So if we get some relative strength, some rotation into healthcare stuff, that's something I would be looking at um, for XLV specifically. Let's look at, Eli Lilly is big name, heavily weighted. There was our breakout here. Um, some of y'all traded this. Here was basically a nice little flag breakout retest. You can see we didn't quite make it back to 50%, but we did hold that 618 level, kind of golden pocket here, right? And then we kind of launched back here. So Eli Lilly 1212, that's pretty much I think a pretty solid bet. We had basically the highest all-time high close on the weekly here. Um, we're not that oversold yet, so Eli Lilly's a pretty good one. I know a lot of a lot of attention on United Healthcare. United Healthcare, we got pretty much almost that whole drawdown that I was looking for, and now we've got. It looks like we got some bullish divergence here. We're heading back to that weekly 200, which is somewhere around 450. This looks like a little flag here, I'd say. Um, Another name to keep on your radar here, and this pretty much we've retraced now almost to 50% of this drop off from last April. So 432, mark that on your chart. That's going to be pretty important. It looks like we got a little flag here. So, all right. I'm going to wrap up the recording here. I'll post this to the YouTube. You can check it out later. Thanks for hanging out.